And good afternoon. It's Saturday, April 24, 2010. I'm Dennis Hudson at orangequant.com, and this is the notice that I put up Friday, just a little bit before the close on Friday. So if you wanted to get something, you had a chance to do so if you caught this message. And in that little 2-minute note, I had said I would follow up with a more elaborate explanation of why I bought these USG puts. After all, I had forecasted that they would be, the USG would be on a tear for some time, and I still forecast that, by the way, but temporarily I've got these USG puts at the $20 strike on May expiration. Bought them at 25 cents. Could have got them, well, probably. I was hoping to get them cheaper, but Monday, if it runs up some more and I get a cheaper price, I'll probably load up with some more. But let's go to the analysis here. Now, you will recall in that forecast that I made back on April 9th, way back on April 9th, I said USG is going to start moving, and for a long-term play, you could probably make some real money here. And April 9th was, and this is a weekly chart, April 9th was way back around, well, where you can see here, right about where I just circled that red one there. That's when I made the forecast. The light green bars you see are the 2 full weeks since then, and don't hold me to the graphic accuracy of those bars. I have made them accurate though at the upper ends. Okay, so I made that forecast, and as you saw in the intervening time, it ran from down around $18 all the way up to $24.75 as a high this week, and so you would have made, that's about a 35% gain on an $18 stock. And we did this with synthetic trend lines from the FLIR 2 ebook, which you can download at orangequant.com. Now please bear in mind that these synthetic trend lines you're looking at were constructed, I'm going to circle where the construction was made. They were constructed right about at this point down here. That was way before this resulting trend occurred, and that's the power of synthetics. Now, to be honest with you, I didn't expect it to break through this kind of a pink C trend line here, but I knew that it could. It was kind of outlandish to expect it. But if it did, then I knew it could go on up to that yellow, upper yellow D synthetic, and which it has done. And by the way, just to show you a trick that I use sometimes, I will, once it breaks through one synthetic, I'll draw another synthetic to split the difference, kind of like that. And once it pops through that, I know, or I feel pretty confident that it's going to go on to the next one. And that's a tip that's maybe for, well, you can use it actually if you, since I put these things up here, but mainly it's a tip for FLIR 2 ebook users. And yes, the FLIR 2 ebook does cost money. It is $29.95, worth every penny, and you can see the kind of bread you can rake in using this kind of stuff. H2O5 and synthetics and a few other things that are in there. So, all right, back to my reasons for taking out the puts. Once USG hit that upper yellow trend line, I looked at it and I said, you know, it can't, there are no other synthetics possible to construct at this time. In other words, that is the governing line. So, but I also took the precaution of looking at looking back at what's in that forecast, that quarterly chart, and the top on that, well, the top really, that's December that we're talking about over there, where those arrows are. But for this quarter, which is right here, this tiny candle there. For that quarter, the top is about $28.76. So it was, taking out these puts was a bit of a risky bet, except I have this synthetic, this D synthetic, the yellow one, telling me that's the top and it should oscillate around that now, or it might even just follow it and float on top of it and continue upward. In any case, you'll notice that USG, if you look at a chart of USG, it doesn't like to gap, and so I'm expecting a slight pullback at least, and then it may go on up, but on that pullback is where I want to take my profits, hopefully Monday or Tuesday or whenever it's going to do that this coming week. Okay, so the 24.75 was the high last week, or this past week, and the 24.30 marks the theoretical high. So it's pretty close there, okay? And that's all with synthetics. Now a return to the C trend line, that pink one, is always possible. It's I don't want to say it's unlikely, but it's possible. It's just that it's broken through that upper one, and at this point I'm expecting it to oscillate around that one in preference. Another basis for my choice of puts here for the time being, and I would have taken calls. By the way, I'm in for real money now. This is not a contest play of mine. I had been waiting and waiting and waiting. I would have gone long a long time ago, except I wasn't set up to do it yet. I hadn't transferred the funds up. By the time I transferred the funds up, we were up here at this upper D trend line synthetic, and so my real choice then was just to hit it with puts. I'll probably go long after any kind of pullback here. So good luck to you this coming week, and I'm Dennis Hudson at orangequant.com. I wanted to tell you something else. Wait a second here. If you look at the chart on USG, you'll notice that this is a very steep incline that it's been going through, and that was another reason that I decided on the puts. I don't think that I've seen stocks sustain even longer vertical climbs, but it's rare, and I'm just feeling this is exhausted. Although your standard RSI on the weekly is only, I think, 76 on that, and that's a 14-period RSI on the weekly, and which means it's got headroom. But again, I think it needs to pull back some, since it doesn't like to gap, and it has bumped into the upper D synthetic trend line. Alright, again, good luck to you. We'll see you out here this week, and I am live with Skin in the Game. Stay with me.